Welcome back. The Canadian telco sector has been among the worst performing sectors on the TSX Composite this year. Our next guest says consensus about the sector could be too optimistic. Let's bring in Maher Yaghi. He's Managing Director and Telecom Media Analyst at Bank of Nova Scotia. He joins us from Montreal. Maher, thanks as always for joining us. Always great to get your views on the sector. Perhaps the big story in 2024 with this sector was the entrant of a new player into the market. That's Freedom Mobile, owned by Quebecor, and a very aggressive wireless pricing strategy from Freedom/Quebecor as it tries to build its business and build market share. You see that continuing, I believe, into 2025, whereas some other market participants perhaps see that easing. Is that correct?
Thank you for having me on your show, Paul. So you're right. I would say a re-entry of Freedom into the marketplace under new ownership by Quebecor, as you know. And so, during 2024, Quebecor had a strategy, stuck to the strategy, which is price their products below competition so that they can gain market share. Our view, and looking at markets around OECD countries that have seen the entry of a fourth national player. In all of the markets we looked at, including the US and in Europe, our view is that a wireless operator that wants to compete long-term in a wireless market has to get at least 15 to 20% market share. Between 15 and 20% market share. What this allows this new entrant is to be able to have enough subscribers to fund the next wave of technological upgrade cycles that the industry always will have to endure. So remaining at 10% market share, 10 to 11% market share like Freedom is, or Quebecor as an entity, including Videotron on a national basis, is unlikely to be the long-term strategy for Quebecor. We think it's going to be, the aim for the company is to get to 15 to 20% market share. And to get there, they have to keep pricing aggressively their product in the marketplace. And so the impact of that is that the competition, with Quebecor being aggressive on price, Freedom, Rogers, Bell, and TELUS will have to be also aggressive on price to not lose too much market share. And so this is a recipe for another difficult 2025, probably.
I believe you say in a recent report that the playbook on this strategy has been written by T-Mobile in the United States, which has maintained discounts of up to 30% on the pricing of the wireless incumbents in the U.S. and also publicly calling out incumbent pricing. That's the phrase you use. That sounds like advertisements pointing at how much cheaper T-Mobile's rates are than the rates at wireless incumbents. That's the playbook that you expect Quebecor to continue following, correct?
Freedom is following T-Mobile's playbook to the T, if no pun intended here. So you look at what they're doing in the marketplace. They're pricing their product 20 to 30% below competition. They're calling out their peers through both on the regulatory side and also on the public side for customers to see the difference in price that they can offer versus the incumbents. T-Mobile has done that brilliantly in the US. We're starting to see now T-Mobile, as they approach the 20+ market share, they're closing in at actually 30% market share. As they get closer to that level, now you're seeing T-Mobile's pricing starting to get closer and closer to the incumbents, right? Because you don't need to have that much discount. It's better for you to start to increase your prices to make more profit out of your subscriber base. But we're very far from that point in Canada. With Quebecor at 11% on a national basis, they're not competing everywhere, but they are competing in the most populated provinces like Quebec, Ontario, BC, Alberta, and in those provinces, to remain relevant long term, they need to get to close to 20% market share. So we expect 2025, as I mentioned, another aggressive pricing year. And now, in terms of valuation, we have been more bullish on U.S. telcos versus Canadian telcos. At this point in time, I would say that it remains the same view. Some companies like TELUS, for example, we see reasons to buy, be bullish on TELUS going into 2025. But overall, we continue to prefer the U.S. market on telecom versus the Canadian telecom sector.
You say also in your report that you hope that Canadian telcos will be pushed to divest of non-core assets. We saw that recently at BCE. How much opportunity is there for the other big telcos to divest of non-core assets?
Yeah, so Paul, listen, in the US, we went through this phase again as T-Mobile began its ascension to gain market share. We saw Verizon, AT&T start to divest of their non-core assets, focus on telecom, get out of fixed operations like their tower business. They sold their towers. We think the Canadian telcos need to look internally and look at their cost. They look at their utilization of their assets and improve the return on invested capital from within, because they're not going to get it externally on price. So, we see, for example, an opportunity for the Canadian telcos to divest of their tower assets, which they still own completely. They have assets that are heavily regulated, like BCE, in rural areas that they don't necessarily need to keep holding on to. So, we think it's an opportunity for the telcos in Canada to begin to look internally and improve the return on invested capital by looking at their assets. And that could save the sector in 2025 if they begin to do that.